All right, today we're diving into the world of venture capital, but this isn't the story you think you know. We're gonna peel back the layers on what some are calling a hidden collapse, a massive tectonic shift in how startups get funded that's been happening right under our noses.
So if you go and look up the size of the venture capital market today, you'll see a number that looks something like this, $368 billion. And on the surface, that looks pretty healthy, right? A huge, thriving ecosystem just fueling innovation around the globe. But is that the real story?
Yeah, what if that number isn't just a little bit off? What if it's actually masking a really dramatic truth about what's going on in the engine room of the tech economy?
Because, check this out, according to the analysis we're looking at today, when you strip away all the noise and adjust the data for what's actually venture capital, the true market looks a lot more like this, just $50 billion. I mean, that is an absolutely staggering drop of over 85%. So you gotta ask the question, how is that even possible? How can an entire market be miscalculated by over $300 billion? That's the big mystery we're unpacking, and believe me, the answer reveals a pretty fundamental shift in the whole world of innovation. Well, the answer starts with something at our source material calls the Great Data Distortion. And the thing is, the problem isn't some grand conspiracy or anything like that. It's actually way simpler and honestly, kind of more profound. It's a basic categorical error. For years, we've just been lumping two completely different kinds of investment firms together and calling all of it venture capital. You see, this mistake is happening because a whole new kind of financial giant has emerged. One that the source material gives a new name to, venture banks. So what exactly is a venture bank? Well, think of it as the final evolution of a super successful VC firm. They're not just making those risky early-stage bets anymore. Nope. They've grown into these massive multi-billion-dollar asset managers that play across the entire financial field. We're talking growth equity, debt financing, even private equity-style buyouts. And listen, we're not talking about some obscure firms you've never heard of. We are talking about the biggest names in the industry. You know, firms like Andreessen Horowitz, General Catalyst, Thrive Capital. These titans have basically transformed into something entirely new, but our data is stuck in the past, still counting all their billions under that old venture capital label. And the difference is just fundamental. A traditional VC is all about making those high-risk, early-stage bets, trying to find the next unicorn. But a venture bank, they have a totally different goal. They have to deploy billions of dollars in capital. That completely shifts their focus to multi-stage asset management. It's a whole different ballgame. So here's the real consequence. When you bundle the enormous funds of these venture banks with the data from traditional VCs, their sheer size just completely hides the reality. It makes it look like everything's fine, when actually the traditional early-stage venture market has quietly had an absolutely epic collapse. But, and this is a really big but, this collapse isn't the end of the story. Not at all. In fact, it's actually a new beginning. The disappearance of that old market has created a vacuum, and something new is growing in its place. Let's call it the funding revolution. Here's the good news. With the old guard evolving into these venture banks, this massive gap appeared at the earliest, riskiest stages of funding. And you know what they say about nature abhorring a vacuum? That exodus has sparked a genuine revolution in how new companies get built and funded. So who's stepping into this void? A whole new vanguard of funders. That's who. We're seeing the rise of venture studios, which are kind of like co-founders that build companies from scratch. There's revenue financing, which gives you capital for a piece of your sales instead of equity. And you've got strategic corporate VCs who are investing more aggressively than ever before. The source material we're looking at really just nails this whole shift with one powerful quote. The old guard killed VC. The vanguard doesn't need it. Wow, that's a pretty bold statement about creative destruction, and it really speaks to the incredible resilience of innovation. The rules of the game have totally changed. So, all of this leaves us with a really fascinating, forward-looking question to chew on. With this new, much more diverse ecosystem of funding options taking root, what does this revolution truly mean for the next great idea? You know, maybe, just maybe, it means there are now more paths to success than ever before.